Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Matthew Sigel, who's a portfolio manager and head of digital asset research at VanEck. Thanks so much for being here, Matthew.
Good to see you, Sumit.
Absolutely. So I want to ask you about this new ETF that you launched just earlier this month. It's called the VanEck Onchain Economy ETF, ticker symbol NODE, NODE. Why did you decide to launch this fund this month, Matthew?
Well, the SEC is now much more open to various structures of listed ETFs. So after the election, we realized there'd be an opportunity for an actively managed ETF that can hold crypto ETFs as a subset of its portfolio holdings. So this is a hybrid product. We are calling it VanEck Onchain Economy ETF. It's mostly an equity strategy comprised of companies that are trying to make money or save money from open source blockchains like Bitcoin. And then we complement that with up to a 25% weight in global crypto ETPs like VanEck's Bitcoin ETF, HODL. And we're running, for example, Solana ETF in Europe, VSOL. So those are two of the underlying ETF holdings inside of Node.
So Matthew, obviously you're aware that there's other crypto ETFs on the market, other ETFs that hold stocks of crypto-related companies like Coinbase. Can you tell us what distinguishes Node from these other ETFs? Is it the fact that it also holds cryptocurrency ETFs as well?
That's one issue. But the other one is the principal pushback I've gotten from investors about this equity universe is the volatility. So we've been running a passive strategy called DAPP, Digital Transformation ETF, that owns only pure play equities in the crypto space. So Coinbase, MicroStrategy, Bitcoin miners, very large weights in those funds. And what we found is that many of these pure play stocks trade at volatility levels that are twice or even three times that of Bitcoin itself because of leverage, small market cap, idiosyncratic business models. So simply adding Bitcoin to these stocks has, if history is a guide, improved the returns and lowered the volatility. But that vol will still be very high, I think, for the average investor. So what we've done here to differentiate the product is really broaden out the investment universe. Any company that's mentioning Bitcoin, blockchain, crypto, digital assets in their SEC filings, in their conference calls, identifying this as an end market that they are planning to serve, those companies become eligible and in the investment universe. So in the day one holdings, what you'll find is actually pretty material weights in some of the downstream and midstream energy companies, utilities, pipelines. Many of them have identified Bitcoin and AI kind of together as an end driver. And these sectors can offer something, I think, really attractive for the regular investor who's worried about this volatility. I think of it like ballast. These names pay dividends. They're much less volatile. And in periods of big time stress or dislocation in the markets, when everyone's bearish, we can jettison that ballast and hope to pick up some of the higher vol pure plays. But we really only want to do that during washouts because a lot of these pure plays are very dilutive, kind of like altcoins, where the minute the stock goes up, they're just issuing so many shares and easy to get diluted. And one of the interesting things about kind of these utilities and midstream energy and even some of the fintech names is they benefit from the same structural tailwinds that support Bitcoin adoption, this more kind of pro-growth economic policy, potentially more abundant energy, which would benefit Bitcoin greatly. So when you combine these exposures, I think you will find an appealing balance of offense and defense. So for investors who are just really bullish tactically, want to take a lot of risk, we have DAPP, which is that pure play vehicle. And then for investors who I think want to feel more comfortable buying and holding through the cycle, I think Node will provide an interesting exposure.
Very interesting. So a much more expansive universe of stocks that you're pulling from compared to the typical crypto stock ETF. I know this is an active ETF, Matthew, and you kind of touched on it a bit, but how active is it? How are you deciding which stocks and which ETFs to put into this portfolio?
Yeah. So the investment universe is 130 odd stocks. It's really anyone who owns crypto or who has a plan to make money or save money from crypto. And we're trying to target kind of a blended average beta to Bitcoin and volatility, which is consistent with our macro view on the asset. But I think generally you'll find it kind of less than one beta to Bitcoin. And the ideal company is a asset light, dominant market share, earns the cost of capital and can compound over time. There's very few of those right now who are pure play to crypto. So when you find companies like a Robinhood, for example, a pretty core position that does kind of tick those boxes, that might be a larger position size than the pure play miners and exchanges, which we will own, but probably a smaller position size. Some of the other criteria that we're looking at, um, uh, we're allergic to leverage in the space. So last cycle, a lot of the crypto companies that took on debt ended up going bankrupt or restructuring. So companies with high leverage, it's a higher barrier to include. We're looking for very strong corporate governance. So disclosures, right? That's one of the benefits of equities versus crypto is that you're on this periodic disclosure regime, which everyone knows about. And that regime is much better in the US than overseas, just on frequency of filings, on disclosure around things like executive compensation, dilution. So there is a bit of a corporate governance screen. It is a global fund, so you'll find securities in the fund in Brazil, in Japan, some Asia stocks, but the majority will be comprised of companies that we think have excellent governance.
Great. And final question, Matthew, you touched on this. You mentioned DAPP is a more volatile ETF than Node is. So can you kind of summarize for us how these various crypto-focused ETFs should be seen, how they fit into a portfolio? You have something like Node here, you have DAPP, and then you have the spot Bitcoin ETFs as well, spot Ethereum ETFs as well. How should investors think about adding these various ETFs into their portfolio? Where do they fit?
Sure. So, at VanEck, we try to manufacture intelligently designed investment products, and then the investor can express their own view. So I think that question, really depends on the end goals of the client. What I can tell you about what I'm thinking, I, of course, own large amounts of Bitcoin via our spot Bitcoin ETF, and I'm using Node as a satellite strategy to my kind of core S&P 500. So I'm hopeful that we can, outperform the broader indices and avoid some of the large volatility that's inherent in the leveraged part of the crypto space. So personally, I sold, a bunch of SPY essentially and moved it into Node. And I think we can find a niche as a satellite equity strategy for folks who are aligned with the mission or the kind of thesis around Bitcoin, but just want a little bit of a muted alternative.
Fantastic. Well, a ton of great information, Matthew. Thanks so much for your time.
Good to be with you.